Hey everyone, this video is going to be about how to get into a trend once the trend has already started. This is something that I really struggled with because I always wanted to catch, the perfect entry of a trend, whether it was the bottom of an impending up move or the top of an impending down move. And once the trend started, I no longer knew how to get in. I'm like, how do I get in? How do I get into this trend? It's already happening. When's a good time to get in? So I developed this indicator. I call it my blue dot entries. These are my blue dot entries. The name is irrelevant, but and I've got a monitor over here, so I'm going to be looking over here. But this, what we're looking at here, is a 5 minute chart of Amazon, and you can see these blue dot entries. So, uh, and look, they're not all perfect, obviously. No indicator is perfect. But the idea is that if you want to be bullish, these blue dots will give you a good place to get in. If you want to be bearish, these dots will give you a good place to get in. And if it's bearish, then the dot is above the candle. And if it's a bullish, then the dot is below the candle. So you'll see, for example, this here obviously is a downtrend. How do you get into this trend? It's already started. How do you get in? Well, this is not a bad time to get in. These are not bad times to get into the trend. Here's not a bad time, not a bad time. These are all places where you can get into the trend at an intelligent place. And by the way, it calculates by wicking in a downtrend, wicking above the 8 period exponential moving average. Now, it's really important that the exponential moving average is calculated on the open, high, low, close divided by 4. Because on such a short time frame, only 8 periods. Like if you're talking about a moving average that has 50 periods, 200 periods, even 20 periods, you're fine. You can use the close. But if you're only using 8 periods, it should calculate on the open, high, low, close divided by 4. That's actually the same thing that is used to calculate Hakanashi candles. And Hakanashi candles are known to smooth out the price action. And that's what this change will do for you, is it will make the line, that exponential moving average, smoother. And so that's what I've done here. So it has to wick above in a downtrend the 8 period exponential moving average, of the time frame. We're looking here at a 5 minute chart. So we're talking about the 8 period exponential moving average of 5 minute candles. And then it also has to have a high that's above the highest body high of the last couple of candles. It has to wick above. So there's a number of little nuances that I did to try and get the best possible entries. But basically, this is giving you an intelligent place to get in. So these are in a downtrend. Now there's areas here like where this chop. So do you want to be bullish? Do you want to be bearish? Well, you don't really know. This is sideways chop. If you want to be bullish, well, this isn't a bad place to get in. If you want to be bearish, that's not a bad place to get in. But let's face it, trading in chop is no fun, and it's hard to make money in chop. But whenever you're in a trend, like this is a clear trend, where's a good place to get in? Well, these are pretty good places to get in. Now, this also has a weakness, which is that every time the trend changes, right? And you don't know the trend has changed. If you're in a downtrend and all of a sudden you have a green candle, you don't know that that's the beginning of an uptrend. All you know is this is a green candle. And you never know that ahead of time. So every time the trend changes, you're going to have blue dot entries that are false, right? And this is a perfect example. This one right here. See this? So this is a very tiny little downtrend, and then it reverses, and now this is a nice uptrend that's taking place here on the 5 minute chart. And what happens? It triggers this. So it's not that you should take every one of these trades. This is meant to be a guideline to be like, okay, do I want to be bullish or bearish in this situation? Maybe with this big candle reversing this entire move, you don't want to be bearish anymore. That would be the right, but you just never know. No one's going to be a genius and get it right every time. But this should give you a framework to get into trades that you want to be in. Let's take a look at a few others. So this is the Google chart. Again, this is an uptrend. Where's a good place to get into this trend? You believe the reversal has happened. Where's a good place to get in? Well, these aren't bad places to get into this trend. These are good places, and it gives you a way to get into the trend that's already in motion. How do you get into a trend that's already taking place? right? Here's, mostly chop. This is drifting down. These are good places to get into that downtrend right here. But here, this here is a nice platform. Anytime you see this, this is basically a bull flag. You've got an impulsive move up and sideways chop. That's a trend reversal. You see this all the time. This is all the time you see this in the stock market. So here's the second half of that move. You can even do a Fibonacci just to show you. These are so common that you've got here. This is on the 5-minute chart. You've got this, right? So this happens all the time. You've got a flagpole, sideways chop, and then it breaks out, makes the 100% measured move. So you see this all the time. So when you see that, you can be like, okay, we're probably going into an uptrend here because that's a classic reversal pattern. When's a good place to get into that uptrend? Well, this isn't a bad place. This isn't a bad place. These two, as it turns out, are bad places because it came right back down afterwards. Which is unfortunate. But again, it gives you a reason, okay, maybe I get in here, maybe I get in here for this uptrend that's unfolding, right? So let's just go through a few more. This one here is a trap. I mean, this is a nice bull trend. Would have been nice to get into these. These are good entries to get in, and then it gaps down. That sucks. This is generally a bearish day. This had a lot of good places. Whoa, sorry about that. A lot of good places to get in to this downtrend, which was right here. These are all good places to get into a fading market. A gap down, tried to come up, failed. So that's generally a decent sign that this thing's going to drift lower. And you can see how this plays out, blue dot entries. Look at this. This is how, look at that trend. It's incredible. So this is an uptrend starting. These are good places to get in. And wow, this thing really took off. And this isn't a bad place to get in, but this was so impulsive that it obviously didn't wick below the 8-period moving average at all during this entire time. That's incredible. Not easy to take this trend after such a big move. To think that it's going to go even further. But in any case, that is a good entry. These are good entries as it continues higher. And you can see how this plays out. These are my blue dot entries, and I use these all the time. Let's look at just a couple of more just to get some other examples. This is Apple, the Apple chart. Here's a downtrend, decent places to get in, good place to get in. The downtrend. So again, do you know it's a downtrend? Have you established that it's a downtrend? If so, you can look for these blue dot entries to get in. Look at this. This is a bull trend, and we didn't have a single blue dot entry on this way up because it was so impulsive. In fact, we had two false ones right here. By the way, this is another classic reversal pattern where you have a big candle up, 3 down, which are mild, and then another big candle up. That's generally a sign that it's going to go higher. But again, both of these blue dot entries were false. I mean, this one technically you might have scalped a little trade here, but that's not the one you want. In any case, no entries on the way up here because it was that impulsive. It gave you an entry here, but went a little bit lower first. And what happened afterwards, I don't even know. So it went up a little bit higher. Right up here, marginal new highs are dangerous. Whenever you see the continuation, there's 2 things I want to point out here. One, this is a fairly steep ascent, right? And this portion here, the second part of the move, is not as steep as the first part of the move. That's a tell. The slope is very, very telling of what's going to happen next. If it's drifting higher, grinding higher, that's a bearish sign. It's not a bullish sign, generally speaking. And then if it goes up and makes a marginal new high, which is what happened here, and it fails, that's a very clear sign that this thing's probably going down. And let's see what happens. I'm assuming it goes lower. It does. Good place to get in here. Good places here to get into this downtrend. I'll just delete that really quick. Let's look at one more. Let's look at Tesla. Here, this is obviously the same period of time. Let's go to a different period of time just to see what's going on in a different time. Okay, here we go. So let's do this up and down. So here's a down move. Good place to get in. And these dots print as the candle is forming. So you don't have to, it's not like it prints after the fact. It happens, that blue dot appears at the time the candle is forming. So good places to get in, good places to get in, good places to get in. Here you've got a reversal. This is not an obvious reversal. I mean, in a sense it is because it goes and makes the same high. Son of a gun. Sorry about that. Let me just get back to where we were. So this, again, like how do you find bottoms? How do you find tops? Incredibly difficult to do. But what's happening here? Well, it goes down, makes a marginal new low, right? This slope is very it's just drifting down. This is not impulsive. So you're probably getting close to the end. And then what does it do? It comes back up to the same high. So what's happening? It's closing the cup. Cup and handle pattern. So it created the cup, and this is the little handle right here, and then it starts drifting higher. So is it obvious? No, it's not obvious. But the bottom line is this ended up being the reversal. This is an uptrend. Here's good places to get in, good places to get in as it takes you on the way up. And then if I remember correctly, this thing is coming back down later. So this is absolute chop. This is grinding lower, which is generally bullish, and we do have a little bit of an up move here. But what happens after this? Oh, you've got a gap down. So, I mean, gap downs are hard you obviously can't predict gap downs, but these are these little indicators that I've created, and you could do the same thing. If it wicks above the 8-period exponential moving average, and if it's got a higher high the high is higher than the body high of the last few candles, then that's the blue dot entry right there. And it does serve as a really good opportunity to get into trades that you already believe in, you already have confidence in. You just want to find a way to get in. If you like this content, please subscribe, like the video. You have no idea how big of a difference that makes for someone like me, because it's telling Google that the content is good. And so Google ends up, or rather YouTube ends up showing it to more people, which is obviously what I would like to do. So if you like it, if you don't like it, no problem. Tell me why. Tell me why in the comments. I would love to make these videos better. But if you like it, please like and subscribe. Thank you for watching, and we'll see you on the next one. Bye-bye.